All right, welcome everyone. We are back, the New American Realist here. I have Peter Grandich here today with me. I'm very honored to have him. It is March 10th. When we're recording this video, I'll try to post it today. I will go over some economic questions with Peter. His knowledge for me has been, I've been following Peter for several years now, and he's one of the most authentic, I believe, voices that I've heard out there in the financial world. So I am very honored to have you here, Peter, with us today. So how are you doing today?
Well, I'm very honored to be with you. And anybody that says they're American realists versus the fantasy that's on Wall Street, I'm more than glad to talk to them.
All right. So that brings us to the first question today. I know this is a little bit of a loaded question. I get it, but I know if anyone can sum this up when it comes to GDP ratios to the debt and everything and the government spending, what is your overall look with economy right now, where we stand?
So in 2021, wherever I could, I hopped and said that America was entering its worst ever economic, political, and social era. And in 2021, a lot of people didn't want to listen. By the end of 2022, they wish they listened. And it is still my assumption of that. I'll break them down. It'd be too long to go the long version, so I'll give you short bullet points, and you can, if you want to follow up on anything specific. From the economic standpoint, not only does most people know some degree how indebted the country's come. When I started in the business, honestly, I never imagined we would use the word T to describe debt. And now we have trillion-dollar deficits and 30 something trillion on hard debt, and the CBO says we're going to add another 19 trillion over the next 10 years. That in itself is a huge problem. We're going to have problems servicing just the interest. And then debt throughout state, government, corporate, individual people, it's pretty bad. So people know about that. It's not a surprise. What people are being surprised about, what I've been talking of late, is what I call the coming retirement crisis. And the reason I know it's going to be a crisis is we've been told now up to 75% of Americans are working paycheck to paycheck. Last year or two, they had to use credit cards just to buy necessities. So they have not been in a position to put away and save for retirement. In fact, studies have shown that less than 10 to 15% really have the funds already or close to saving to live a respectable life, what they view as a respectable retirement life. That in itself is going to cause huge problems. The first problem, obviously, a lot of people are going to have to work into an older age. And I can tell you now that I become a senior citizen. Young man called me for the first time the other day, an old timer, and I turned around because I thought he was talking to somebody else, but it was me. But the bottom line is some people, many people are going to have to work, and it becomes more difficult when you're older to do the things that you're doing 30, 40, and 50. The people that retired have an even more serious problem because they're already been counting on what they have to live off of. And now, between last year, Fidelity said retirement accounts fell 25%, add at least 10 to 20% of inflation over the last 2 years. And they're already got a serious problem, especially if the market doesn't come back. And I'm not expecting the market to crash, but I don't think we're going to all-time highs again in my lifetime. The other problem that comes from the retirement crisis is senior housing and low-income housing. Both are in desperate need in major cities, areas. Here I'm in New Jersey. And then what I'm sad to say is the worst of that crisis is going to be what I call a battle of the ages. So you're going to see some restructuring on Social Security, Medicare, and Medicaid, but they can only do so much. The rest is going to be what politicians are good at, raising taxes. And so working people, especially younger, are going to be far more burdened earlier in their life on taxes than I was. And they're going to say one day, wait a minute, you're taking out all this money and for Medicare, An 85-year-old man, you're spending hundreds of thousands of dollars to do a lung transplant, whatever it may be. No, let him go. The man that's 85 is going to say, well, you took my money all these years. I still want to live. You got to do this. So there's going to be a battle of the ages. And what I'm really afraid of is what's already happened in Canada. Now, they do have socialist medicine versus our type of medicine, but they passed a law 2 years ago and have been very active in it. They have been telling very old and or very ill seniors, just take your life. Don't worry about it. Don't suffer. But mostly because it'll be a financial savings to the government. And it's very active. If people don't believe this when they hear it, just Google it and you'll see it. And if there's any country like us, closest to how we live and act and all, it's Canada and the US. So while I don't think this is happening tomorrow, anybody that's looking out 5 or 10 years or more, things I just discussed with you are going to become paramount.
Retirement crisis is the words that you used. Retirement crisis, correct?
Yes.
Yeah. Wow. That's one of the videos I did listen with you. I forgot who interviewed you, but that was another eye opener, and you went more into details with numbers and everything. And I was just stunned by all this. It's just very sad to see older people, like you said, they thought this is good enough for their retirement. This is what they saved up. And now they're starting to realize some of them might have to go back, and they already are going back into workforce. Do you believe that's the reason why we're seeing this supposedly great numbers with new jobs, because people are looking at 2 to 3 jobs to make ends meet due to inflation, and senior citizens being forced to work longer? Is that accurate?
Yeah, I need to get to you about the employment numbers and all, because that's an important thing. But let me
Yes.
just go back to your first part.
Mm-hmm.
Problem is, most of the financial advisors, retirement planning is one of the big parts of what people go to financial advisors for. Most financial planners, from what I can tell, either don't know, don't understand what we just discussed, or if they do, they don't want to speak about it because it's not a pleasant thing. And they want people to be feeling pleasant so they can do business with them. The problem now is for the retirees. Most financial planning is what I call traditional financial planning. And it's usually trying to obtain a higher net worth so you could either pay for retirement, pay for your kids' college education. Problem now for the retirees, they basically retired on something called the 4% rule, where you figure out how much you can take out 4% of whatever your worth is, and that'll pay for your yearly living. The market goes back up, you're able to take out another 4%, and you live off the market. Last year, they learned they can't do that. It's a serious hiccup. If you get 2 years in a row with that plus inflation, they're really behind the 8 ball. But the problem there was both those investors and the financial advisors grew up in a world where we had a one-way street. Fed cuts interest rates all the way down to zero. The federal government prints trillions of dollars. And that's one of the main reasons the stock market kept going up. I don't think those days are here anymore. So especially the retirees already have a much difficult problem. In terms of your employment thing, yeah, there's some seniors going back. But what we saw last month, and a lesser degree today, but it was still there, the greatest fudging of changing seasonal adjustments and one-time ways that they count in order to show an employment picture that's not anything close in reality to what they say it is, especially when there's just so many dramatic layoffs going on. Now, many months from now, they'll go back and go, oh, we made a big mistake, and they'll readjust them and all. But they gave an illusion, and I'm hoping the Fed didn't buy into it, and it's one of the reasons they're staying too tight, because things are not as good as the employment number would suggest. And the consumer, which GDP, 70% of GDP is off the consumer, is exhausting their means to continuing everyday life. Debit credit is hitting all-time highs. We're now seeing problems with auto loans. We're seeing some problems in some other debts that people carry. So we're not too far away if nothing magically gets better, where this is all going to show up and show up in a negative way.
You're basically saying that what I'm understanding is this is stagflation that we are in right now. Is that correct? Are you painting that picture?
Yeah, it's not a word that had to be used since the 70s. And I would bet you even a lot of financial advisors couldn't explain to you what stagflation is. But you're right. It's a slowing or stopping of the economy while inflation remains constant. And the inflation genie is out of the bottle. For a year since they remember the Fed, first of all, the Fed said we're not going to have inflation. Then they said when we start to have it, it's only transitory.
Yep,
And
yep.
now they tell us they're going to get us back to 2%. The genie is out of the bottle. In order to get us back to 2%, we would probably have to see employment at double digit unemployment. We would have to see at least a strong recession here and probably a recession in many countries. So our trade would drop as well. That's a hard price to pay to get inflation back to 2%. I would tell people get more accustomed to 4% or 5, if they can get it down there and stay there. And remember, this is not just isolated in the United States. Many of the Western world is having serious troubles with inflation. And it all goes back to what they did with COVID and shutting down and supply issues, and then a huge war in Ukraine, and who knows how China is going to react to all this, and are they going to do something with Taiwan and make the United States be on two fronts?
Mhm.
So again, this is stagflation. The economy is not anywhere near as strong, and the Fed, if they continue on as they spoke during this past week, being extra tight, we may pay a big price there. But let me put one caveat. As you know, as you and I speak, we've just now had the second biggest bank failure ever in the United States. And the repercussions are only going to start to be felt in the coming days and weeks. This could be fly in the ointment. No, it will be. Let me correct that. It will be a fly in the ointment for anybody in the Fed that still wants to remain very tight, especially if the markets get away from them and we start seeing really, 400 or 500 point days down day after day after day. Uh, we'll only know in the next few days if that happens into next week. So there's a lot of things out there, but there's nothing good I can find in any of them.
So speaking of the Fed, I'm glad you mentioned, of course, the Fed. It's kind of hard to do these meetings without talking about them, right? So the next meeting is coming up very soon with the next possible rate hike. Do you believe they're going to go 50 basis points, 25, or they're going to pause now and to kind of add this on the Fed? What is the Fed's funds rate number percentage that you believe they can get up to? Do you believe they can get to 6% before we see more banks basically going under? Or this has already started the domino effect that we are witnessing with everything that we found out today and yesterday with banks?
So if you asked me that question on Tuesday after he first spoke, I would have told you there's definitely a 50% rise coming. It was clear and evident, although he tried to backtrack it a little when he spoke the next day because there was so much heat about that. But this situation today that has occurred has a lot of domino effects possibilities. We're talking about some a lot of companies that were being funded in Silicon Valley, startups, advanced private companies, just a whole lot of possible domino effects. So the only way I cop out on this to you is over the next few days to see how bad this situation comes. If they're able to stop it here and get major bank or major banks to take over that bank and eat some of their heavy losses, then it won't be as severe. But I really do think that the Fed is going to catch themselves and realize we can't keep raising rates to much past 5% because then we have a huge problem. We're going to have $33 trillion in national debt. Put a 5% interest rate on that, because eventually you have to refinance it. And you're talking about $1.65 trillion in interest expense. I think that would take well over a third, approaching a half of all the tax income we take in. It's unsustainable then. And if you saw his testimony, he caught himself, but it was out when Warren was speaking to him. He did say it's unsustainable, but then he said, no, no, we can manage it. And
I saw that.
when you add that,
Yes, I did.
yeah,
Yep.
and when you add that 19 trillion on that the CBOE says we're going to have to endure over the next 10 years with all Medicare expenses, Social Security, boy, it really does. For the first time, I was around hard asset people that were always predicting the end of the world and load up on gold, guns, ammo, food, that kind of stuff. And I used to say, I just don't believe that has any realistically. But we're getting to the point now from an economic standpoint. And let's throw in one other thing, two other things. Politics. This is going to be the most dysfunctional Congress ever seen. Democrats and Republicans want absolutely nothing to do with each other. They're at odds like any time ever in America. But within their own parties, they have a fraction that differs with them. So I don't see how they could suddenly go in rooms and solve some of these issues that we're facing. And socially, the United States, like it or not, has made a shift to the left and a shift towards secularism away from more of a faith-based country and incorporated those faiths even into everyday life. In fact, half of Americans, according to polls, are either atheists or agnostic. That also has ramifications because within that gets born socialists and communists because they point to the few people that still have it, which now Biden's tax proposal is basically saying the rich, the rich, the rich, we got to get them. And they say we got to take a lot what they have and distribute it to everybody else. In effect, there are more people in the wagon now than ever before. And those of us who have to pull it are pulling harder and harder. And quite frankly, I like to jump in that wagon too. So there are a whole, like I said, socially, politically, and economically. And I'm going to tell you this, not to sound like I'm some wizard or an all, because I could talk to you about how to lose money as well. But I don't think financial advisors have depth of knowledge of what we just spoke about. And if they don't, then their clientele is suffering from that. And by the way, a lot of financial advisors now are just asset gatherers. They're not even making the decisions on what to do with their clients' money. They're turning it over to a management group and they share in the fee. And maybe that's a good thing because then they don't have to be that smart. But I don't think we could have this conversation with the typical financial advisor out there and see them be able to speak and share their thoughts about this because even if they do know about it, they don't want to talk about it.
Yeah, and they don't get any yield for telling their clients to invest in physical assets like gold, for instance. So why would they even talk about that, right?
Well, just to answer you that, I've had this saying for years. The financial service industry treats gold like kryptonite. They don't want to go near it. Two reasons why. Not a lot of money to make in it because you can't keep turning it over, buying, selling, doing that kind of stuff. And two, it flies in the face of what they do make a living from, financial assets. But I always say to them, well, why don't you just have them buy 1 or 2% and treat it like car insurance, home insurance? Tell them that hope to God your gold doesn't go up because if it goes up a lot, chances are your financial assets went down. But if we went into any financial service office now, I've heard it as high as a half of 1%, but I'd say it's 1/10 of 1% of ownership of gold or things related to gold, where it really should be 3, 5, or up to 10% of their portfolios.
Well, that's kind of a perfect way because I was going to end the video with that question right now. I am not a financial advisor, but I know Peter, you do a lot of stuff with. You did do stuff. I don't know if you want to talk about that real quick for a minute with NFL, and you decided to get out because of your Christian beliefs. People ridiculed you for that, and that's another reason why I could not wait to have you on a show to come out. I was honored because you're a man with a backbone. We don't have many of those nowadays. So if you can tell us real quick on
Sure,
the story,
sure. I appreciate that. Well,
yeah,
I'll duck out of the way and you can see what's left of my sports world. But
yeah,
you're right.
me too. I have
Uh,
there is a Bible behind me right there.
oh, God bless you.
Yeah, you're
So,
yes,
uh, I, for many years, was in Christian ministry, although Catholic. I worked with some Protestant ministries. I actually was with the New York Giants for 11 or 12 years, and I did Bible study in chapel with them. And I was a New York Jet fan, so I knew there was a God. But I became great friends with a lot of them. But what happened was, I first had an issue because when the Colin Kaepernick started to not stand for the national anthem, I made some comments in columns, and I lost a few players as clients. But when they went to the incorporating the socialist stuff and all the wokeness and these other things, I had to make a decision. On one sleeve, I wear my Catholic Christian faith, and on my other sleeve, I'm involved in the sports world. Based on what the sports world's doing, it clashes with this. I would be really disservicing my faith if I continued. So I had made a tough decision, and it was a very tough monetary decision. But I ceased all working, shut down an office, and just stopped working with any current or former players. Most of my clients were either football or hockey.
yes, and it was all you. I've seen you had a lot of pictures with the Jets and all that because you're out there on the East Coast. Was that correct? With that,
Yeah, well, I was blessed. The most amazing thing since you went this way, let me just tell you,
I
as a sports fan,
know where you're going.
I had two all-time favorite guys that I grew up watching. One was a former Jet named Joe Klecko, and another was a hockey player for the New York Rangers named Nick Fotiu. In fact, he was the first New Yorker to ever become a New York Ranger. And as God would have it, I would not only meet them, but they would become very good friends. And so I lived what a lot of guys say are great sports fantasies. But what sports has become, not only is it 100% business, and that's hard for fans to understand, but trust me, the owners are running it 100% as a business, not as a fan. But it's also people went to those games to get away for a while, both on the left and the right.
Exactly.
Leave that out there. I want to have fun. I want to scream for the team and all. And sports brought it right in front of them. Everything that's happening out there outside the arena or stadium is now front and center. And, I couldn't live with that. There are a certain amount of people that backed away and just didn't go back, but there's still enough to where the NFL can pay quarterbacks 40 or $50 million a year, which is just astronomical if you think about it, to play a game of sports. But God gave them the blessing to throw a ball well, and they're getting paid for it.
Yes, I'm so grateful that you shared that story with us. To finish off real quick, I just wanted to ask you. I lost this screen for a second. I just wanted to ask you. I'm a soft and hard commodities guy, and I can't just leave our listeners without asking you. As I mentioned, I'm not a financial advisor. What is Peter's Grandich favorite right now? Are you looking just overall gold, silver, platinum, copper, uranium? Just give us in 1 minute, if you don't mind, of course,
Sure.
run down your top three players
No.
right now.
Well, like I said, you have to own gold for no other reason other than insurance, but I'm owning it for capital appreciation opportunity. And I'm doing that through mining shares and junior resource stocks, which if you're not prepared to lose part or all your capital, don't even thinking about doing it because you'll have mental anguish. That's what happened to me last year. On the base metals, we have such a shortage of minerals for a whole lot of reasons, let alone for this electrification. My favorite's copper. The next one is zinc. Lithium has already had a tremendous move. I mean, it could still make money, but the future big money is left in things like copper. But I'm actually now, for the first time, and people have been annoyed at me, silver bugs, because I never really liked it a lot. I always said you can own it, but it was never in the forefront. Down at $20, you just have to step up and want to own silver or things related to it. So I'm looking at some silver plays as well.
Well, number one, copper, number two, silver. Is that what I understood?
No, copper, zinc. Well, copper, gold, zinc would be the top three right now, but they're all so close to one another, and it should be spread among them. It shouldn't be heavily invested in one and not the other.
Well, ladies and gentlemen, this was Peter Grandich today. I enjoyed this interview. I enjoyed every minute of it. So I really thank you for coming out on this show. And I will post this most likely today, and I will tag you on Twitter. Can you tell our listeners where they can find you real quick?
Yeah, I'm on Twitter at Peter Grandich. And of course, my blog is petergrandich.com. And I'm actually have a YouTube channel now where I put up all these videos, including yours, that will go up. And I
And
have to ask you one question. Is that you in the sailor uniform in the back?
yes, that is me. Yes.
So I want to thank you for serving. I
I didn't
think
stay.
every
I
I
didn't stay too long, but I did go through
it
some.
doesn't matter.
Thank
It
you.
doesn't matter. And the saddest thing in America is we are not taking care of our veterans, but all sorts of people coming from everywhere that are getting treated 10 times better than our veterans are. So anytime I see anybody in service and all, God bless you and thank you for serving.
Thank you, and God bless you too as well. Hope we talk soon. Thank you again. Thank you. Bye bye.
All right.